I'm Priscilla Barrera with the Investing News Network, and here with me today is Andrew Miller, Senior Analyst at Benchmark Mineral Intelligence. Andrew, thank you so much for joining us today.
Thanks for having me.
All right, so the first half of the year is almost over. Can you tell us what is the current state of demand in the lithium sector? Is demand from the electric car space really impacting lithium demand at this point, or what are the current drivers in demand?
Yeah, so I think demand in the first half of the year, especially in China, demand growth has been a little bit slower than many had expected in the second half of last year. A lot of that is obviously tied to the subsidy situation in China and some of the capital issues some of the consumers have been having there. China's been such a big market with growth in consumption over the past few years, but we expect that demand growth to improve in the second half of the year, and you'll start to see some more consumption in the third quarter especially. In terms of the electric car sector and the impact that's having, obviously the subsidies have had a direct impact on that, but we are starting to enter that period where the electric vehicle demand is becoming a reality, is becoming a real driving force in the industry, and I think you're going to see signs of that certainly, like I say, in the second half of the year and moving into 2019 as we approach the ramp up in many of these mega factories.
All right, and looking over to supply, what is happening in the market? Can you share what have been the main factors impacting supply of spodumene, lithium carbonate, and hydroxide?
Yeah, a lot's been talked about in terms of supply this year, and obviously there was a lot of concerns at the start of the year, especially from people outside the industry, and not so much from people inside the industry, about the new Chinese conversion capacity, the new spodumene coming out of Australia and Brazil as well. Really, the reality of that this year, you have seen some new supply come from China. Some of the feedstock sources in China have been expanding a little bit as well. Really, the impact of new spodumene, though, is only really going to start to come to fruition when those new Australian spodumene projects enter their ramp up in the second half of the year again. And you also have the project in Brazil, AMG's project there as well. So I think on the supply side, you are going to see more converted. I think the question then becomes, where is the conversion capacity in China and how much is actually readily available? And then again, how much of that is going to be battery grade material? From our perspective, we spent a lot of time on the road in the first half of the year, visiting these plants, looking at the conversion facilities and making our own independent assessment of where we see that going. And we think there is going to be a bit of a bottleneck, especially in terms of producing a battery grade material. There's a huge amount of nameplate capacity, especially in China, but it's not just going to be, that's not the reality of what's happening in that market. When you look at that nameplate capacity figure, we put something out recently that if you add up all of the existing and the potential newcomers into the Chinese lithium market, and you add up what they're saying they're going to be able to produce, you're looking at somewhere in the region of 600,000 tons, which is incredible, way over where we think they'll be able to actually produce. You start breaking that down, and 50% of those producers have never actually produced lithium commercially before. And then you look at historically where a lot of those, the operating rates of those other projects have been, and they're far below where their nameplate capacity is. So we think the market is going to remain pretty finely balanced for the rest of this year.
All right. And we saw a lot of deals happening in the first few months of the year, most notably maybe Tianqi minority stake purchase in SQM. Do you expect to see more of these deals in the second half of the year? And what will be the impact on the market?
I think there's certainly, definitely going to be a lot more deals, especially along the supply chain within lithium. There's a growing acceptance from the end users of these materials that lithium could potentially be a problem, and they're very eager. They've invested heavily in expanding their cathode, their battery production, and for the OEMs, they've committed to electric vehicle models. So they've realised that they're going to need to have more control over their raw material. They've seen what an undersupply, like we've seen in the past couple of years, the impact that can have on the market. So definitely we're expecting a lot more partnerships, deals, potentially investments between different companies in that supply chain. And I think that's just something that's going to continue and escalate over the next couple of years.
Right. And in terms of regional development, can you share your thoughts on what geographical areas are promising in terms of supply? Will we see more expansions in Chile, and how is Australia positioned in the global market?
Yeah, I think you're certainly going to see some expansions in South America. They're already underway. Obviously, brine takes that a little bit longer, but many of those have been in the pipeline, and you're going to start to see, certainly going into next year, some significant new volumes coming out from SQM and Albemarle in Chile, and FMC are also looking to expand, and Orocobre expand their production in Argentina. So South America, from brine, we definitely see playing a very crucial role in the market, and you are definitely going to see those expansions start to come to fruition over the next couple of years. Obviously, what's been what's been filling that supply gap over the past 12 months or so has been new spodumene coming into the market, and undoubtedly you've seen continuing ramp-ups in those the new plants, the new mines that came online last year. And we also see, 3 new producers that are entering commissioning and going to be beginning their ramp up in the second half of the year. So there will be a lot more spodumene coming into the market, and especially for those Chinese converters, that's going to be very crucial. But there's 3 layers to those ramp ups. Really, there's the commissioning and the ramp up of the mine. Then there's the question of what type of material those companies going to be producing. Is it all going to be a 6% product, or whereabouts is that going to be? And then you have to look at the partners that's going to. Is there the conversion capacity in place to accept that material? So Australia will continue to grow, and we know there's going to be a lot more production there. And you also have some new spodumene production that's going to start coming out of Brazil as well. So spodumene, again, a lot quicker to market. But then the question becomes, is the conversion capacity, is it the right type of product, and is the conversion capacity in place today? And there's some big challenges there as well.
Okay. And in terms of prices, have you seen anything that you were not expecting in the first half of the year? And can you talk a bit as to how Benchmark analyzes prices and what makes it different to other price assessments?
No, I don't think we've seen too much different from what we anticipated. Obviously, I think that some of the decreases you've seen, especially in the second quarter, in Chinese carbonate prices, has taken some by surprise, but really, that's just a reflection of the volatility in the Chinese market. For the past 2 years, there's been a significant premium on where the domestic Chinese prices have been compared to the rest of the world. They're coming down to more closer levels to the rest of the world pricing, not still above those levels, but coming closer, and that gap is now narrowing, certainly between the prices in China and outside. But I think that's just a reflection of the Chinese market and the way the lithium transactions take place there. There's a lot more volatility, and there's the potential that an undersupply, if the demand growth does pick up faster than expected in the second half of the year, we certainly expect those prices to level out, and there's the potential for some grades as well that you may see some more increases as well. So we haven't seen too much that shocked us in the market in the first half of the year. What we do at Benchmark, and a lot of what we spend our time doing, is collecting prices directly from the market. We're speaking to buyers, sellers, traders, those actively involved in the industry. We collect that information together. We have a team of analysts who operate around the world, collecting that in the form of phone calls, emails, but obviously as well, we go and visit the mines, we go and visit the companies firsthand. That's where you can get the best information a lot of the time. So we use lots of methods, and then we collect all that information together. We publish monthly prices for 11 different lithium prices, and when we collect all that information together, we're cross-referencing it a bit. We're not just speaking to a limited number of suppliers or consumers. We're speaking to a vast majority of the suppliers in the market, and we're also speaking to a large number of consumers, and that allows us to cross-reference the piece of information that we receive and make an independent assessment. And it's the team of specialists we have here at Benchmark. That's very much what we're focused on, and that's why our prices are becoming a reference point for the industry. And a lot of companies are beginning to use those prices in their negotiations. So, the process is very robust. We have a market-specific methodology, and we're developing and evolving those prices and what we put out to the market in line with what the industry needs.
Right. And as you mentioned, you've been to a couple of site visits this year. What are some of the things you look for in a project or that stand out when you're doing a site visit?
Yeah, so it really depends on the raw materials side. Obviously, it's the flow rates for the brine and the ponds and those type of things. On the spodumene side, it's more hard rock mining, and you can see a lot of what's happening there. And then you have to look at the concentrator. That's the crucial stage before that goes to the chemical converters. For the converters, you have to look at everything. You have to look at the set of impurities they're producing and the particle size, all that type of stuff, which is very important in determining which market it can go into. When we visit so many of these projects, it's comparing as well what you see at one type of conversion facility to another. You can make some good assessments on where the production is going, and particularly with the expansions. That's a very critical part of what we've been doing this year, is visiting the companies that are expanding, trying to see it firsthand, trying to put our own timings on when we're going to start to see that material come into the market. And that type of information all goes into, as well as our pricing assessments. We have our long-term forecast division that we've launched now as well, and all of that type of information feeds into those services.
Right. And my last question for you today, looking ahead to the second half of the year, what do you think are some of the factors that could impact the lithium market that investors should pay attention to?
Again, for the second half of this year, I think the big thing is going to be looking at the ramp up in those spodumene operations, and how quickly that can actually find its way through to a chemical product for the market. Like I said, we're expecting demand growth to improve from where it's been in the first half of the year. There's big question marks, I think, still over some of the new material, whether the volumes firstly are going to be there, but what is the quality of that material? In the battery industry, there's lots of different specifications for what a battery consumer can accept. And it's going to be critical, and it takes time for that new material to find its way into the consumers and be usable. There's qualification periods, but also it's meeting a specification and getting a consistent product into the market. So that's something we're certainly paying a lot of attention to in the second half of the year. And like we say, we see the market remaining pretty finely balanced. You still have prices outside of China gradually increasing for new contracts, because the market's still very tight, and we don't really see that changing for the second half of this year.
Right, Andrew, thank you so much for joining us today.
Thanks for having me.